Well, it's a good morning or good afternoon, actually, and welcome from me. Welcome from Cheltenham, Gloucestershire, UK, the world, the universe, whatever you want to say. That was probably a TV program start at some point. I'm Paul Archer. Welcome to my live stream. Got some useful and interesting ideas to share with you, actually, on our live stream this week. Didn't have one last week because it was bank holiday here in the UK. We're all enjoying chocolate and gardens and stuff like that with friends who were able to come around. Pubs are open today. Did you hear that? You may even be down the pub right now. I don't know what your plans are, but I must admit I couldn't imagine anything worse than sitting in the pub garden at 4 degrees with a north wind blowing upon you, which is what's happening out there at the moment. It snowed here this morning, so I can imagine. Of course, these pub landlords that have put up these great gazebos or chalets in their gardens, they didn't read the rule about 50% of the walls need to be open, so many of them having to knock them down, aren't they? The searches people go to have a drink in a pub, it's amazing, isn't it? Anyway, enough of all that. Let's give you some topics today on the mortgage world, because I've got a few topics for you. I've got one on bridging, which is a great new opportunity for those of you mortgage brokers who want to expand your network, expand your business. But the first one actually is a little bit more concerning for the industry and what we need to do about that. And then I've got a sales skill to pick up with at the end. And I'll do a few more videos as well, not on live stream, but if you're on the YouTube channel, do subscribe and you'll get to see a couple more videos this afternoon that I post for you. Or they may get posted this evening. It depends on how well we do. Enough of that. Where have all the trainee roles gone is my first topic for you. I hope you're well, by the way. Hope you're keeping well. Here's the first topic then. Where are all the trainee mortgage advisor roles? Trainee mortgage advisor. Now, I remember back in 1982, I picked up the local paper, because you didn't have internet then, of course, and there were jobs in there from the Halifax Building Society and the Leeds Permanent Building Society, looking for trainee managers or trainee mortgage advisors. But in those days, of course, the manager was a mortgage advisor, and it was a trainee position, and they offered full training, classroom courses, mentoring from your local branch manager, and you had a 1 year, 2 year fast track training system, and I thought it was great, and I went for it. I went for the Leeds. In fact, they took me on. They were more full then, really, and they trained me. It was good training, and I was paid a reasonably decent salary, enough to to pop out and about as much as I could, get a car and things like that, and it was great. They've all gone now. That's the problem. I was on LinkedIn last Friday. Young lady who just passed the CMAP, had the little emblem, looking for work, looking out for trainee mortgage advisor positions. Anybody help me? Let me know. There aren't any. They're all gone. And that's the big worry. And why are they all gone? Well, it's down to the lenders, banks, building societies, large lenders. Used to have great big sales forces. Obviously, they used to have branches, didn't they? And the branches, be they physical bricks or in the telephone call centres or video centres at head office, they used to have hundreds, thousands of mortgage people, mortgage advisors, who used to give advice on mortgages. And that was great, because they took new people on and they had the infrastructure to train you. And you like to work there. I mean, when I went to work for the Leeds Permanent Building Society as a 19-year-old young man, I loved it. It was a great job. It was permanent. It was stability. All gone now. Why are they gone? Well, the banks and building societies and the big lenders who used to have great big teams of mortgage advisors have realised that they can't afford that anymore. It's not something they want to do. You see, when you're in the mortgage industry, there's two risks. It's all about risk, isn't it? You have the lending risk and you have the advice risk. The lending risk is the risk of lending money. So the bank, for example, let's just choose NatWest Bank, good lender. They lend money, so they loan money on mortgage, or loans, of course, and that's known as the lending risk. Obvious, really. The lending risk is risky. You're lending your money. Obviously, there's plenty of government guarantees around now to make sure you're not lending too much, and the government provide guarantees to help you. And banks are pretty darn good at this. They know how to lend. They've got affordability models. They've got credit searches, and they can do it and do it really well. And that's the risk. What they used to, of course, is they used to give advice. Now, mortgages, of course, require advice. It's a regulated industry, so you need a person to give advice on the mortgage, and that's known as the advice risk. The advice risk is just as risky in a way, because if you give the wrong advice, then you can be complained against, you can be sued effectively, and there's compensation money, there's compensation claims management companies roaming around the UK looking for business all the time. They're looking for as much money as they can get. So any hint of a mis-selling, and they're on you like a rash. So the advice risk recently has become more and more dangerous for lenders to get involved in. And they're thinking, hold on, is it worthwhile us lending? Yes, it is worthwhile lending. It's what we do. Is it worthwhile us giving advice on the loans? No, let's not do it anymore. And that's what they've done. And they've come out with this, I've heard the phrase, whether you'll see it promoted by them or not, is bots or brokers now. Bots or brokers. Bots or brokers is the phrase. So what they're doing now is they're saying, look, we don't want the advice risk, so let's stop doing that. So how are we going to lend our money? Well, hold on, there's lots of brokers out there. Let's go and lend to let's get the brokers to lend for us. So the advice now has been done by mortgage brokers. Now, a mortgage broker, by her nature, is an independent person who takes the advice risk because they're qualified to do so. The broker might be authorized through a network, or they might have direct authorization, doesn't matter, to give advice. That's the advice risk, you see. And the lenders are quite happy then to talk to the brokers. In fact, banks and building societies have been recruiting hundreds of BDMs recently. If you want a job that's very well paid, highly stressful, but very well paid with a car and all those good things, but you need experience for that one. BDMs is the way to go. And BDMs, of course, sell to the broker. They sell them. So NatWest have been recruiting BDMs, and those BDMs will rock up in front of the broker and say, look, deal with us, we're great. And that's the way the banks have decided to move. They don't want the advice risk anymore. They don't want mis-selling scandals. I mean, PPI killed their reputation for advice, didn't it? Think about it. Do people trust banks to give advice anymore? I don't know if they do. Maybe the younger generation have turned off. I don't know. Mis-selling, terrible reputations. The metaphor I like to use is the army and the Air Force predominantly. And you might have seen the odd skirmish recently by powers around the world with their air forces. And the one that intrigued me was the Iran Saudi down in the Middle East, Iran proxy in Yemen. I don't know what the situation is, but it doesn't matter. But they have an air force. So they could either send a manned aeroplane to bomb the baddies, or they could send a drone. Now, a drone, of course, is a pilotless aircraft operated by somebody with a joystick. And this drone hovers over, drops its bombs, etc. More and more air forces now are using drones because there's no pilot risk, because the pilot won't get killed. The drone will get knocked out, of course, but they can replace those pretty quickly. So drones now are beginning to dominate air forces. They are here in the UK and the US. In the Middle East, more and more drones are being used. Now, that's the metaphor that banks are using. They won't tell you that, but that's what they're doing. It's bots or brokers. At the moment, it's brokers. They're using brokers. Brokers are giving advice. Brokers are using the banks, lending, plenty going on there as well, high street lending. But over time now, they're evolving to bots. A bot, of course, is a robot, and a robot will give advice on mortgages to a customer. Just like a pilot will remote control a drone to fly, there'll be people at head office, one or two people maybe as backstops. They'll be operating 100, 200 bots that are giving advice to clients. When the bot can't cope with the advice, it'll flip to a human and the human can take over. That's happening right now as we speak. And the banks are good at that. They've got fantastic software engineers all around the world who can develop software. People like to handle this because it's all chat box based and they can get all the advice they need on a basic mortgage, which isn't really complicated. Okay, get into the specialized mortgage world. That is complicated. Bots can't do that. I'm doing a video later on bridging finance, for example, commercial finance. Bots won't get involved in that market area because it's too complex. Humans, brokers will carry on that one. So brokers, beware. You're getting plenty of business from these banks at the moment. They're loving you to bits, but moving forward, it may not be that way, and you need to bear that in mind. But the biggest problem, as I'm concerned here, is where are all the trainee mortgage advisor positions? If you're new to the business, where do you go? If you're brand new mortgage qualified or CMAP qualified person, what do you do? Well, arguably, you join a broker, and that's where you want to go. Now, there are some very big brokers who are taking on employed people. There's some very good big brokers. I know loads of them, Dynamos and Countrywides and Habitos. There's some great companies that take on employed people. I do a lot of work for them. So you need to be looking at that angle. Will they take on trainees? Yes, they will. But remember, of course, it costs money to train people. It's expensive. Don't think for a moment it's not. It is. It's very expensive to train people. You need trainers and coaches and time and all those things to train people. And some of the broker firms might not be willing to do that. So they'll probably want to take on experienced people if they have the choice. You can certainly come into a broker as a self-employed person as well. So you can look at the self-employed option. There's lots and lots of options there on the market. Loads of self-employed options. You think about it, you become an AR, an authorized representative of a broker firm or a network or wherever. So they take obviously the advice risk and charge you for it, and you're self-employed and you do what you like. But some people don't want to be self-employed, and I get that. And of course, to get a trainee self-employed position just is an oxymoron, isn't it? It just doesn't work that way. You know? So it's a bit of a quandary, really. So joining a network that gives you good mentor support, good coaching, good training is where you want to go to. Even if you're self-employed, it doesn't matter. You're still connected to the network, connected to the broker, for all intents and purposes. So choose one that looks after you, that protects you, that guides you, that coaches you. If you need mentoring, learning about how to do the job, we're providing that. I was talking to the LIBF about that recently, about how we can help with people learning the ropes, learning the skills, learning the intricacies of becoming a mortgage advisor. They're the key ones as well, to fast track you through CAS. There are options around, but you have to sort of be a little bit more innovative. If you're looking and searching for a trainee mortgage advisor role, there ain't that many around at the moment, until people suddenly realise that to grow, employed sales force, employed advisor force is the key. To grow people, take on new people is a great thing to do, but you have to put money into it. You have to invest in it. Very few brokers are willing to do that right now. It may change. I hope it does. Keep you informed of that one. So that's the state of the mortgage market for you. Keep you up to date, because that's what I do. Hope that's been useful for you. Bye on that one. There you go. Okay. Yeah, that's the way it's happening. That's the way I see it. Remember, we're here to help you, to inform you. We're not adherents to any lenders or brokers or anything. We tell you how it is. We'll tell you how the mortgage market is doing. So if you're looking for CPD, we're here to help you. We come straight to you, the consumer, without going through any big organisation. So we can tell you what's happening, what's going on. So it's quite interesting stuff, really, isn't it, when you talk about it? Quite interesting. We are doing a lot of help for people becoming mortgage advisors. We're looking around for new products, new things we can do, using technology, of course, to help coach you, train you to do the job and do it well. Because remember, your CMAP exams is merely only the start. It really is just the start to your career. Okay, let's move on to another topic for you. Let's move on to a technical topic. I've got time to do this one justice, haven't we? Yeah, I've got time to do this one justice for you. Great, hope you're all well. Hope you're sort of surviving, enjoying this sort of temporary coming out of lockdown. It's great to see that, isn't it? So many people getting their second jabs now. It's all happening in this world. The world is opening up, sun shining, all those good things. Although it will snow this morning for some reason. Okay. Let's talk about the topic of bridging finance, which a lot of people scratch their heads at when it comes to CMAP. So let's call this one bridging. Let's put a big title up there for you. Now, bridging finance is what we're talking about, but what I do want to talk about is more than just bridging. Make sure that come up on the title for you. Yeah, we've got that on there as well. I'm talking about the opportunities for you. Opportunities to learn more about bridging and to get good at the role. Now, bridging finance, if you remember it from your CMAP, probably taught you some traditional stuff. You know, what is bridging? You probably learned about open versus closed bridging, where somebody wants to buy a house that they can't sell their existing house. And bridging finance takes care of that. You probably heard about the closed bridging is better because the person's exchanged contracts on the house they're selling. So they get bridging finance only for a few weeks to help them buy the new property as well. That's often called chain breaking, isn't it? You probably heard that banks were the bigger suppliers of this product. but they charge extra interest rates for it. And that's pretty much where CMAP took you, really. But believe me, bridging, there's a whole lot more to it than just that. And it's a massively growing marketplace that brokers really do need to be looking out for, because you do. So the industry's evolved. First of all, banks are not the main purveyors of bridging finance anymore. You get a lot of specialist lenders now coming into the market. West One, MT, Precise. There's lots and lots of different specialist lenders now that will get involved in bridging or commercial finance, as it's often known as, or seconds. It's all very specialist area. And to understand it works, of course, is one thing. But to know where the opportunities are is even more, because that allows you then to have the motivation to learn more about it, to get to know it. So how's the industry evolved then? So the uses of bridging. I'll give you a few examples of where bridging can be used now, apart from the traditional chain break. I mean, we used to call it a chain break, don't we? Yeah, let's put in there that for you, chain break. The chain break, get it right, is where you have a chain of properties bought and sold, bought and sold, bought and sold, buying and selling, where you might have like 6 properties in a chain. And estate agents earn their money by keeping that chain going and getting them all to complete at the same time. Now, often chains break because somebody pulls out or somebody can't sell the house or something. So where you've got a property, 2 properties in the middle of the chain, where you've got somebody buying, somebody selling, if they can break the chain by taking bridging out on the property they're buying, thus not needing the chain below it to be active. You can break the chain. So it's often used in that respect. But that's the traditional sort of close or open bridging that people used to take out. One that I like, I'll give it a different pen here for you, is commercial to residential. You've got a lot of property now in high streets, in towns, commercial property, offices, shops, department stores. We've got a big department store in town here in Cheltenham. What's it called? I remember one of the big department stores, House of Fraser, I think it's called. They've closed it down. It's just empty now. So it's not going to be knocked down. I think it's listed. So what they're doing is they're converting it to some very luxurious apartments. In Cheltenham, they call them apartments. They're not called flats. They're called apartments. They can put another 100,000 on the price. But that's what's happening. So somebody, for example, has got a commercial. They want to convert to residential. So a number of apartments, or it might just be a small property that converts into 2 flats or whatever it is. You can take out bridging finance to finance that, because you've got this commercial block, if you like, is a property. You can secure the bridging against that, because bridging finance lenders are not too worried about, your 2-bedroom, 3-bedroom semi-detached. It's not their marketplace. As long as the property is decent security, they will be able to lend it, and lend it quick. Obviously, it's more expensive. We'll talk about that in a second, but that allows that developer to buy the property and develop it. And once, of course, he or she has converted it into residential flats or apartments, temporarily, they could remortgage the property, get some sort of mainstream lending on it, first charge mainstream lending, to pay off the expensive bridging. Bridging needs paying off anyway. So that's one example. Another one I like as well is auctions. Now, you know about auctions, don't you? Somebody buys a property at auctions. There you go, put a little circle around that. An auction, and they need to complete the property very quickly. As you know, of course, traditional ones, when the hammer goes down, it's exchange of contracts. You've got 28 days to complete. A mainstream mortgage lender may be very slow to do that, but bridging finance is quick. They use automated valuation models and open banking to find out people's credit information. Obviously, credit search is automated now. So they're very, very quick. A couple of days is not untypical for bridging money to come paid out, because of the systems they use. Very, very quick, very up to date. They're not as stringent, you see, when it comes to affordability. They don't really worry about affordability, actually, if truth be told, because it's not what they concern themselves with. So auctions is a great way of getting the property bought. And once you've bought it through bridging, then of course you can remortgage to a mainstream mortgage later. Or of course in auctions where you're buying a property that's unmortgageable. So if you put in there unmortgageable, mortgageable, it's a big word, isn't it? An unmortgageable property, which could have been bought on auction. That doesn't have to be. But that, of course, wouldn't be acceptable by a mainstream lender. So getting bridging on that property would be easier to obtain, because they're less strict on the desirability of the property. Because again, they're more interested in the exit plan that you've got than the actual long-term long-termness of the property they're taking under mortgage at the time. Development products or projects come into mind as well. So if you're doing some kind of development, more commercial, isn't it? Development projects, and that would link in maybe to commercial converting to residential. But if you're doing development projects, then bridging finance is definitely the port of call there. Self-builds, for example, somebody buying a bit of land and building on it can be financed through bridging. Kevin McLeod's show, of course, he waltzes in, tells them they've got no money left, and they get all worried. Oh, we have to mortgage the property. They don't do mainstream mortgages on that program. They do bridging because the property is probably just consisting of a bit of land, isn't it? Maybe with some foundations in. So bridging lenders would come in there, assess the value of that land, and lend accordingly. That's how they work. And again, once the property is built and finished, then you get it remortgaged at a lower mainstream mortgage rate. It's not a difficult concept to get comfortable with. That's how bridging finance lenders work. The other one as well to think about, squeeze this one over here for you, is more complex borrowers. I'm not talking about teenagers that are a little bit complicated with their thinking or something like that. I'm talking about borrowers that don't have the ability to get a mainstream mortgage. There could be a stain on the credit report. There could be expats. It could be some other issue around their affordability, self-employed owner directors, whatever it is. Some mainstream lenders are getting very strict now with self-employed people, whereas bridging finance lenders not too worried about that really. They'll look more at the security and the exit plan that they've got. So there's plenty of opportunities there. Large loans, another one, large, £1 million, £2 million loans. Mainstream lenders wouldn't touch, but a mortgage or a bridging finance lender might well look at. So there's quite a lot of opportunities, aren't there? I've mentioned already that lenders look at three aspects when it comes to property on bridging finance. They look at three things. Number one is the security. What is the security? What is the main security for their loan? Is it sufficient? They're very keen to look at that because that's often what they'll fall back on. Again, that security could be land, it could be property, it doesn't matter. Commercial, residential, it doesn't make any difference. A lot of these loans, of course, are unregulated, so commercial lending is unregulated. So look, number one, at security. Number two, they're concerned about why people need bridging. Now, as a mortgage advisor, I think, it's easy. People have needs, and I elicit needs. No, that's not the issue. People, you see, don't want bridging. They need it. They don't want bridging finance because it's horrendously expensive. It's not beating about the bush. Average rates start at about 0.5% per month. So, of course, you're looking at 6, 7, 8, 9, 10% sometimes, depending on the risk involved, on commercial or people or whatever it is. These are often all sort of open bridging, aren't they? Much more expensive than closed. Closed is very rare. So people don't want bridging, they need it. They can't get, mainstream finance. They can't get finance from the bank's first charge residential mortgage. If they did, they'd go there, wouldn't they? As a mortgage broker, that's what you would advise. But people need it for some reason. It could be the speed, complexity of their borrowing situation. It could be the need to chain break quickly or a property that's not mortgageable in the normal way. So that's number two. Number three is the most important one. How and when is it going to be repaid? They call it the exit plan. They're not going to want monthly payments. They don't bother with that. Monthly payments on this sort of thing, that's a different world. That's residential mortgages. Bridging finance is payable as a lump sum at the end of the deal. If it's a regulated mortgage or bridging, it needs to be less than 12 months. So there's quite a few period in which it's got to be repaid, and they'll look for the exit plan. Typically, the exit plan could be sale of a property. So you get your commercial, you do it all up to some lovely residential, you flog them off quickly. Obviously, the money you make from flogging will pay for the bridging finance. So you're selling that property effectively, aren't you? Again, the auction, you might do it up and then sell it on Homes Under the Hammer. They often do that, don't they? I love that program. They go and sell the property and make a huge profit, and they pay back the bridging as a result of that. That's the main way in which they have an exit plan. It could be refinancing. So once you've done the property up, you might want to go and live there, of course, and then you refinance it. You remortgage the property with a mainstream. Other ways could be a pension pot, for example. You could be accessing your pension pot at age 55, tax-free cash. It could be an inheritance that you're due. That might be another reason to have an exit plan planned as well. So that's what lenders look for. They look for the exit strategy. There's a few bits around regulated, unregulated. The unregulated market is much bigger. The regulated bridging market is quite small. Quite a few lenders get involved, most don't. Regulated bridging is for less than 12 months. The exit strategy has to be a sale. It's very traditional. They often do first charge against the property. They can do second charges as well, or what they call cross charging, is where you have a property 1, property 2, and you can actually secure against both properties in a form of cross charging. So you can cross charge effectively. Ha ha! Do you like that idea? Some sort of superhero thing, isn't it? But where you have two properties and you cross charge on each one, so you can actually raise, say, 500,000, but secure some of that against the first property and some of it against the second property. That's quite acceptable to do that as well. First charges tends to be where bridging likes to sit. There's nothing wrong with doing second charges as well. Second charge bridging is not uncommon. You can get very high percentage lending on this as well. So if you've got a piece of land, for example, that you're developing, you might be able to lend quite high on that, with a first charge, maybe second charge, 80-90% loan to value. So there's quite a lot going on there. It's a lucrative area. The fees, the proc fees they pay you are higher because there's more work involved. There's more complexity. There's more knowledge that you need. You need specialist clients here. They're not every day available, are they? Developers are not like hundreds, thousands of them. You need a lot of knowledge. You need a lot of contacts with the various lenders as well. So the proc fees are higher as well. You need to learn a lot more. CMAP's not enough at all. It hardly touches it. You want the advanced diploma, CMAP diploma, or the RO7 paper to learn more about bridging. Even beyond then, you'll learn more and more about it as it evolves. Lenders are evolving every day now, so you have to keep yourself up to date with what's going on as a mortgage broker. I do wish they'd make CPD compulsory. The FCA listening, just make mortgage brokers do CPD as a compulsory feature. They should do that anyway. But good ones like you, indeed, but good ones like you, of course, have the need and the want to learn. Otherwise, you wouldn't be watching this, would you? So you take your CPD seriously, don't you? Otherwise, you wouldn't be watching this particular video. So yeah, great market to be in. Great market. I know a lot of people. I've got some clients who specialise in this area, and they're people just give advice on this one. Very internet based, of course. Telephone, video, whatever is the mechanism to deal with clients on this one, or face to face. But it's a marketplace. There we have bridging your opportunities. Fantastic. Ta-da! Well, that pretty much brings us to an end, really, because we've been running for half an hour. It's quite a long time, isn't it, for a live stream? So what we need to do then is just to wrap things up for you. We just need to wrap up and make sure that we're all finished. What's going on? Well, we've got our new boot camp starting next Monday. We've got our Spring 2 boot camp. Got a few spaces left. Been really popular, actually, this one. People want to get into this mortgage market, so make sure that you're there for that, because that starts, if you're interested, you or a friend or whatever wants to start boot camp, just go onto the website, find out more about it there for you. There's plenty of links here on there for you. We, as you know, are here to help you. So if you've got any comments or questions on the YouTube channel, please just ask those. Happy to help and produce some more videos for you as we move forward as well. Got a few people actually talking to me now as we speak. Thank you, Daniel, for your contact there. So that's enough from me. I hope you're well. Hope you enjoy your week. Remember, pub gardens, but keep safe, keep away from people. Remember to put your masks on. COVID, by the way, has not gone away. It won't go away at all. So don't think it has just because we're coming out of lockdown. A lot of people think that. It was a bit strange, isn't it? We'll be here next week for you. We'll see you then. Have a great week. Bye. Ha.